Hello friends, welcome to Mock Test channel. Today in this video we'll be covering all the recently asked question and answers from NISM series 21, that is portfolio management scheme. And friends, if you're interested in getting latest question and answers asked in any of these NISM exam, please head to www.mocktestchannel.com, wherein you will find all the recently asked question and answers, that too with explanation. So before you go for the exam, do practice in the mock test channel and you will be able to increase your scores and clear this exam in first attempt. So let's begin. First question is, the dash characteristic of an asset provides a good basis for selection of various asset classes. Options are A, the risk return profile, B, time to maturity, C, yield, D, price of the asset. Then the correct answer is risk return profile. As you know, whenever we are going to buy any asset, the most important thing that we will look at is what is the risk that I am going to take and how much return am I really going to get. Going to the next question, before issuing a certificate of registration to a PMS firm, the regulator will ensure that A, the PMS firm applicant has appointed a compliance officer, B, the principal officer of the applicant PMS firm has the necessary NISM certification, C, the principal officer of the applicant PMS firm has the experience of at least 5 years in related activities in the security market. So you have to say which of these options are correct. Only A and B, B, only B and C, C, only A and C, and D, all A, B and C. And it seems that all the three options are correct. Let's go to the next question. Identify the correct statement with respect to residential status of an individual as per Income Tax Act 1961. Options are A, the residential status determines an individual's total taxable income. B, the residential status determines an individual's citizenship. So options are only A is correct, B, only B is correct, C, both A and B are correct, D, both A and B are incorrect. So the correct answer is only A is correct, that is the residential status determines the individual's total taxable income. Going to the next question. MS. A unique fund manager is a PMS distributor. As a fund PMS distributor, it should have options: the valid certification as specified by SEBI, B, disclose the commission charged by the various PMS distributor services, C, necessary infrastructure to provide support to clients, D, all of the above. And the correct answer is you should have all of the above to be a PMS distributor. Going to the next question. What can you conclude if the correlation coefficient between two variables is plus 0.75? Telling about correlation coefficient, it varies between -1 to +1. +1 being the positive correlation and minus being the negative correlation. Let us see the options. We can conclude that both the variables are positively highly correlated. B, we can conclude that both the variables are positively inversely correlated. C, we can conclude that both the variables are perfectly positively correlated. D, can't draw a conclusion unless the variables are known. And the correct answer is we can conclude that both the variables are positively highly correlated. Going to the next question. A company which wishes to come out with public offer has to enter into an agreement with all the. So who all have to be in agreement when a company is wishing to go for a IPO? Options are depositories, B, depository participants, C, stock exchanges, D, custodians. And the correct answer is all the depositories. Going to the next question. If a country receives good monsoon rains, then it will have a positive effect in the agriculture inputs such as fertilizers and seeds. Ideally, stock prices of fertilizers manufacturing companies should dash if the rainfall is adequate. Options are decrease, B, increase, C, remain unchanged, D, show a big downfall. And the correct answer is it will increase. If you see, if the rains are good, then the farmers would be ready to put more fertilizers. So the prices of the fertilizers will rise up because of the demand rise. Going to the next question. The need for rebalancing a portfolio arises because of options: the change in the risk return characteristics, B, change in the asset weights, C, changes in the asset prices, D, all of the above. And the correct answer is all of the above. Going to the next question. The disclosures which are made by portfolio manager to regulators are options are directional, B optional, C mandatory, D voluntary. And the correct answer is they are all mandatory. Next question. Supervised wealth managers are a portfolio management firm and it has kept all the funds received from its clients in a separate account maintained by a foreign bank in India. Is this permitted as per the SEBI? Yes, do's and don'ts of the portfolio managers. So the question basically is like this particular bank is a foreign bank in India. So is it permitted as per SEBI or not? Options are yes, it is permitted as the funds are kept separately in the commercial bank. B, yes, it is permitted only if the bank is a scheduled commercial bank through foreign. C, no, it is not permitted as the funds are not scheduled commercial bank. D, none of the above. And the correct answer is yes, it is permitted only if the scheduled commercial bank is though it's foreign. Going to the next question. The code of conduct for portfolio managers include which of these points? Options are the portfolio managers have to observe high standards of integrity in dealing with clients. B. Portfolio managers should not execute any trades against the interest of the clients in its proprietary account. C. Portfolio managers should obtain in writing from the clients about their interest in various corporate bodies. D. All of the above. The correct answer is all of the above. Going to the next question. Coronavirus had impacted the stock markets to a great level. During such times, what advice can a portfolio manager give his client who is in accumulation phase in the adventurous investor? Options are the advice will be to rebalance his portfolio equally with equity and debt. B. The advice will be to rebalance his portfolio more in favor of debt. C. The advice will be to rebalance his portfolio in the favor of undervalued equity. D. The advice will be to liquidate his portfolio and in cash. The correct answer is the advice will be to rebalance his portfolio in the favor of undervalued equity. Going to the next question. On what basis are various fees and charges that are going to be paid by investor levied? They are levied as per the agreement between the investor and the portfolio manager. B. They are levied as per the guidelines of the SEBI regulations 2020. The investor has no say in this. Options are only A, B, only B, C, both A and B, D, neither A and B. And the correct answer is only A. That is, they are levied as per the agreement between the investor and the portfolio manager. Going to the next question. Mrs. Singhania does not have any real estate in India. She has financial asset of rupees 40 lakhs and liability of rupees 7 lakhs. Mrs. Singhania also has a US dollar deposit in tune of US $30,000. Calculate her current net worth if the exchange rate is rupees 80 per US dollar. So now we have come to a numerical question wherein we have been given certain data and we have to find the current net worth. What is the current net worth? Current net worth of any person would be the total asset he holds minus the liability. We have been given the financial asset this person holds is 40 lakh rupees. Other than that, he also holds 30,000 US dollar. Each US dollar costs like 80 rupees, so it is multiplied by 80 and we get to 24 lakhs. And the liability this person has is 7 lakhs. So what we have done is we have added the assets, that is 40 lakhs and 24 lakhs, and we subtracted 7 lakhs and we come to a figure 57 lakhs. So the correct answer of the person's net worth would be 57 lakhs. Now let's go to the next question. The trainer ratio of a portfolio is 0.07 and the portfolio return is 17%. The risk-free return is 7. Calculate the beta of the portfolio. Option is 1, 1.4, 1.75 and the option is given data is insufficient to calculate beta. So let's find out. For trainer ratio, we know that risk return rate minus of risk free return divided by beta gives you trainer ratio. Trainer ratio has been given in the question as 0.07, whereas return earned is 17 and risk free return is 7. So 17 minus 7 divided by beta will get you the value of the beta, that is coming out to be 1.4. So the option D is correct, that is 1.4. So this calculation you have to keep in mind. What is it? Trainer ratio is equal to return earned minus risk free return divided by beta, and this will give you beta value. Next question. When can a client withdraw the funds before the maturity of the portfolio manager? Options are when the portfolio manager goes bankrupt, B, when the portfolio manager terminates his services, C, when the registration of the portfolio manager is suspended by SEBI, D, all of the above. The correct answer is all of the above. Going to the next question. Identify which of these statements is or are true with respect to risk. Options are A. Semi-variance measures the risk very accurately. B. The downside risk is referred to as worse than expected return of the investment. Options are only A is true. B. Only B is true. C. Both A and B are true. D. Neither A and B are true. So the correct answer is only B is true. Let's go to the next question. Which of these is the leading and most important attribute while choosing a comparable benchmark index? So the options are the investment approach, B, the number of securities in the index, C, the measurability of performance, D, large cap in the index. So the correct answer will be the investment approach. When you're comparing two benchmarks, you have to make sure their investment approach are same. Dash represent shares of a local company but listed outside of the home country. Options are foreign direct investment, B, participatory notes, C, participatory receipts, D, depository receipts. And the correct answer is depository receipts. The time period restriction for execution of a trade pre-cleared under SEBI, that is prohibition under inside trading regulations, is. So options are 1 month, B 15 days, C 7 days, D 3 days. And the correct answer is 7 days. That is the time period of restriction for execution of a trade pre-cleared under SEBI. Next, a portfolio manager can charge operating expense while being a percentage of the client's average daily asset under management. What will be the threshold of these charges? Options are 0.05 percentage per annum, B 0.5 percentage per month, C 0.5 percentage per quarter, D 0.5 percentage per annum. And the correct answer is 0.05 percentage per annum. A client has deposited an amount with the portfolio manager. The portfolio manager has decided to invest some amount in the mutual fund units through a direct plan and has charged a distribution fee to the client. Is this correct as per SEBI's do's and don'ts for a portfolio manager? Options are yes, this is correct as it could be as per the agreement between the client and the portfolio manager. B, yes, this is correct as it is the fund management related charges. C, no, this is not correct as the portfolio managers cannot invest in units of mutual funds. D, no, this is not correct. Charging a distribution fee is not permitted as per SEBI portfolio manager regulations. So the correct answer is option D, that it is not permitted as per the regulations. Going to the next question. Which of these statements is or are true with respect to the investment policy statement? Options are A. Investment policy statement is just a reference document and can be altered by the portfolio managers as per the market needs and regulation. B. Investment policy statement is an important document which represents the investors' return expectations and risk characteristics. Options are only A is true, B only B is true, C both A and B are true, D neither A and B are true. The correct answer is only option B is true. That is, investment policy statement is an important document which represents the investor's return expectation and risk character. Going to the next question. A portfolio manager wants to sell some securities. However, he is not sure about the ownership or existence of the securities. Should the portfolio manager agree to do this transaction? Options are yes, he can go ahead with this deal because by the time the completion of the transaction, he will have clarity. B, no, he cannot go ahead with this deal because it will be deemed fraudulent transaction as per the SEBI prevention of fraudulent practices. C, yes, he can go ahead with the deal because it is the company to prove the securities authenticity. D, yes, he can go ahead with the deal because his intentions are good. So the correct answer is D, B. That is, he cannot go ahead with this deal because it will be deemed as a fraudulent transaction as per the SEBI prevention of fraudulent practices. Going to the next question. An investor portfolio has a beta of minus 1.4, that is negative 1.4. If the market portfolio gives 10% return, the investor's portfolio returns will be. So again we are coming to a numerical. Let's see, a negative beta correlation would mean an investment that moves in the opposite direction of the stock market. Here the portfolio beta is given as minus 1.4 and the market is up by 10%. So in order to find out the minus 1.4 multiplied by 10 percentage will give you minus 0.14, which if you want to express in percentage terms, that will come out to be minus 14. That is, investor portfolio returns will decrease by 14 percentage. Going to the next question. Identify the correct statement with respect to NRI's demat account. Options are: the credit and the debits of the NRI demat account need to be permitted by the authorized dealers. B. NRI is free to open demat account with any depository participant in India. C. NRI need not take any permission from the RBI to open demat account. D. All the above are correct. So the correct answer is all of the options above are correct with respect to NRI's demat account. Going to the next question. Mr. Subhash has invested his funds with PMS firm for the last 5 years. He now wants to withdraw his fund. The exit load charged by the portfolio manager will be. Options are 1%, B 2%, C 2.5%, D nil. So you have to understand how this works, because for the first 1 year it will be 3%, 2 years it will be 2%, 3 years it will be 1%, and after 3 years it doesn't matter, exit load will always be nil. So in this question you see that the question says 5 years, so in this case the exit load charge will be nil. Going to the next question. Various business information is asked for the application for the registration as portfolio manager. Identify the incorrect statement in this respect. Option are: the application form asks for database facilities for research. B. The application form asks for various forecasting models used in the investment research. C. Application form asks for accounting systems followed. D. Application form asks for grievance redressal mechanism used. So the correct answer is option B, that is the application form asks for various forecasting models used for investment research. Let's go to the next question. Fundamental analysis is equity research does not include. Options are: economy analysis, B scenario analysis, C industry analysis, D company analysis. And the correct answer is B scenario analysis. Next question. Identify the records which not be kept in the PMS firm. Options are: auditor's report of the PMS firm, B balance sheet of the PMS firm, C financial statements of the companies in which the PMS has invested, D profit and loss account of the PMS firm. And the correct answer is option C, financial statements of the companies in which PMS has invested. Next question. Who is eligible fund manager as per SEBI Portfolio Managers Regulation 2020? Options are: an eligible fund manager is the one who is otherwise qualified as per Section 9A of the Income Tax Act 1961 and one who provides services to overseas funds. B. An eligible fund manager is one who otherwise qualifies the Section 9A of the Income Tax Act 1961 and is registered with SEBI, provides services to overseas funds. C. An eligible fund manager is the one who holds CFA Charter USA. So let's find out which is the correct answer. The correct answer is option B, that is an eligible fund manager is the one who is otherwise qualified as per Section 9A of the Income Tax Act 1961 and is registered with SEBI and provides services to the overseas funds. Let's go to the next question. Which organizational form can portfolio manager take in India? Options are: sole proprietorship, B partnership, C body corporate, D cooperative society. The correct answer is C body corporate. The act of making simultaneous purchase and sale of same asset in different markets is known as. Options are: hedging, B arbitrage, C call put option trading, D leverage speculation. And the correct answer is arbitrage. The goal of Dash can be placed on a low priority by an investor with limited and low means of income. Options are: A providing good education for his children, B buying a health insurance for his family, C, buying a house to be used for his residence, D, buying a sedan car. And the correct answer is D, buying a sedan car. Next question, the classification of active funds and passive funds is based on the options are investment universe, B, fund management style, structure of funds, and option D is background of the fund manager. The correct answer is fund management style. Identify the true statement with respect to advisory PMS. Options are in advisory PMS, the portfolio manager executes the trade. B, in advisory PMS, the portfolio manager suggests the investment ideas. C, in advisory PMS, the portfolio manager takes the final decision on investment. Option D, in advisory PMS, the portfolio manager professionally manages his portfolio. The correct answer is option B. In advisory PMS, the portfolio manager suggests the investment ideas. A 10-year 7.75 coupon bond is selling at 102. The par value is 100 and the current yield we have to calculate. So let's calculate. The current yield is simply comparing the coupon of the bond with its market price. So current yield's formula you have to remember is coupon rate divided by market price. So with the given data, it is very clear. Two of the information is given. You have to find out the current yield and it comes out to be 0.0759, which if you multiply by 100 to give it in percentage ratio comes out to be 7.59. Next question. Identify which of these models is not accepted for execution of PMS services. A, individual execution model. B, custodial execution model. C, pooled execution model. D, not applicable. The correct answer is custodial execution model is not accepted because it doesn't exist. Only two of the models exist, that is pooled execution, in which the fund manager is keeping all the share data onto his own account, whereas in the individual execution, each of these individual will be the ones who will be trading and they will have their own separate accounts. So custodial execution model is the correct answer. The mutual fund industry in India is governed by two major regulations or act. The first one is SEBI Mutual Fund Regulation and the second one is, options are the Indian Finance Act, B, Security Exchange Act, C, Forwards Contract Regulation Act, D, Indian Trust Act. The correct answer is Indian Trust Act. Dash is entitled to the profits arising of a mutual fund investment. Options are A, the unit holders, B, the fund managers, C, both of the above, D, none of the above. And the correct answer is A, the unit fund holders. Which income of a non-residential Indian ID is not taxed in India? Options are income which is received in India, B, income which is accrued in India, C, income which is deemed to be accrued in India, D, income which is arising outside India. So the correct answer is option D, that is income which is arising outside of India. While calculating the yield to call of a bond, information dash is not required. Options are coupon rate of the bond, B, face value of the bond, C, call price of the bond, D, remaining maturity of the bond. And the correct answer is face value of the bond. What is considered as concentration risk in the investment? Options are too much exposure or investment in a particular asset class. Option B, too much exposure or investment for a particular investment horizon. C, too much exposure or investment in a given business sector. D, all of the above. So the correct answer is all of the above. To calculate the price earning ratio of a company, the market price of a company equity share has to be divided by, option is book value per share, B, revenue per share, C, earning per share, D, dividend per share. And the correct answer is earning per share. A person who wishes to work as a principal officer of a portfolio management scheme institution will not be accepted if he or she only has a dash qualification. Option is MTech, B, MBA, C, MCom, D, Master in Law. And the correct answer is MTech. Dash is permissible deduction of out of income interest as per Income Tax Act. Option is brokerage which is paid by the securities, B, premium which is paid to buy the securities, C, interest paid on the loan taken to buy the securities, D, discount when the bonds are redeemed. So the correct answer is the interest paid on the loans taken to buy the securities. So friends, with this we finish this video. For more questions and answers, you can please check out www.mocktestchannel.com, where you will find even more recent questions along with their explanation. All the best for the exam. Please hit on the like and subscribe button